reconciliations. So the agenda for this session is going to be like, what is reconciliation, why do we do reconciliation, and what are the reasons for discrepancies in the sets of records. So what would be the reason why two records may not match? The reasons we will be seeing. So number one, what is reconciliation? Reconciliation is a process of checking two or more sets of records, finding out the discrepancies and rectifying it. It is a controlling process. It is a controlling process through which we check if there is any discrepancies. Now to understand this, let's take the example of, like a person is carrying a wallet, and in his wallet there is a balance of 1,000 rupees. Now this is the actual balance. This also can be called as the statement, which is actually there in his wallet. What he will do is he will also maintain a record. Suppose, imagine he is going out, and he is recording the balance in a piece of paper. So here, this is the ledger where he is recording the balances. He is recording the transactions, so it is called as ledger. And here also he mentioned as 1,000 rupees. And then he goes out, he takes a breakfast for 100 rupees, so which he records it. So in his actual wallet, actual balance 100 rupees comes down, and so he records it in the ledger as well. And then he goes out for a movie, let's say, so again 200 rupees comes down, which he records, okay, in the ledger as well, which he records in the ledger or in his record. Okay, this is the record. Then further, imagine again he is, imagine spending uh, like 300 rupees to have lunch. So again he is recording. Now quite possible, so ideally these balances should match. So in this case it will be like 1,000 minus 100 minus 200 minus 400. So it comes to 400 balance. So here also it should be, if you calculate here also, it will come to 400 balance. But it may not match always. Why it may not match? Say for example, this guy forgot to update over here, so it is 0, mentioned as 0. So in this case the balance will be 700, so it will not match. So we have to find out what has been missed, find out the discrepancies, and we have to rectify it. Similarly, quite possible that it is also mentioned incorrectly. Instead of 300, it is mentioned as 30. So again the balance will not match, and then again we have to find out the differences, and then we have to rectify it. So like this, many differences can happen between two sets of records. Okay, so this is reconciling. Now this is one simple example game, and obviously we don't carry a piece of paper and record all these transactions on daily basis. This is just to set the base for you, to help you to understand the basics. Yeah, but otherwise we do this calculation in our mind, correct? We know that today I'm carrying 1,000 rupees and I spent so and so transact I spent on so and so transactions, and so I tend to check whether what I'm thinking, the balance in my mind is actually there in my wallet or not. So that is actually reconciling or reconciliation that we are doing. So this is at the basic level, but then similarly at the higher level it happens for the corporate also, wherein so there are plenty of transactions happening. So for plenty of transactions, the money keeps going in and out. That's why bank statement, where actual record they will get to see. And also we have to maintain a ledger. Okay, because they are doing plenty of transactions, we will not have the track if you don't maintain the ledger. Okay, so here we will update all the transactions, buy, sell, whatever transaction happens. When there is buy, the cash is going out. Okay, that has to be recorded. When there is, so this is buy. When there is sell, cash is coming in. Let's say 200 rupees shares worth for 200 rupees you are selling, and so this is added. So we need to make sure that when there are plenty of transactions in it, we are recording all this properly, right? So this is reconciliation. Okay, now why two sets of records are maintained? So simple, because one is maintained by the client, which is called as ledger, which shows the accounting record. The another one is maintained by the company or the bank, which is called as statement. Okay, where the actual balance will be shown. Okay, the actual balance will be shown. Then types of reconciliation. Reconciliation is classified into two types. One is internal reconciliation, another one is external reconciliation. So internal reconciliation is something happening within the organization itself. Say for example, from front office to middle office, or from middle office to back office. So basically here, the systems are further cross checked, okay, from one level to next level within the same organization. So when this happens, it is called internal reconciliation. It is done to make sure that the data, right data, is feeded into the system and right data is maintained. And external reconciliation also, again, the intention is the same, to maintain the right data, but then this happens between one entity to another entity, like broker reconciliation, exchange reconciliation, nostro custodian reconciliation. So when I say broker reconciliation, it is between the client and the broker. So whatever the client has given the instruction, whether the broker has executed it properly or not, so there can be reconciliation, that is called broker reconciliation. Exchange reconciliation, whether whatever exchanges, whatever deal has been placed in the exchange, whether that is matching with the broker's record or not, that is broker's that is exchange reconciliation. Similarly, nostro reconciliation. Now nostro reconciliation is, a bank, imagine a bank, in India. Now they will have correspondent bank in US. Now why this is done? This is all for international transactions. So when they will have correspondent bank in US, imagine Bank of America. Now whatever transactions they are doing, so that will also be reconciled. That will also be reconciled. So they will have hold on account over here. They will hold an account over here. So whatever transactions they are doing, that will be, actual. This is actual balances will be shown over here, or statement which will be shown over here, but that should also be maintained by them. So this is their ledger. They will show all such transactions over here, and then this bank will cross check. That is no-show reconciliation. Similarly, custodian reconciliation, this is between let's say custodian and sub-custodian, or between custodian and depository, there can be reconciliation. So that is custodian reconciliation. Okay. Yeah, and reconciliation can also be classified into cash and depot reconciliation. So cash reconciliation will check the cash balances. Depot reconciliation will check the stock balances. Okay, so again, whatever we are speaking, same logic, but instead of cash, here it will be all stocks. So now when I'm buying, again, so when I'm buying, let's say I'm buying 100 shares. So this is the actual. So actually, it will have 100 shares in my account. Okay, and whether record point of view also, whether I have 100 shares or not when I'm buying. Okay, record point of view also, whether I have 100 shares or not. Okay, so this is depot reconciliation. Okay, so reasons for discrepancies. Would you like in the first example I told you, there can be mismatch between two sets of records because of wrong entry, or it can be because of wrong entry, or maybe missing entry, where you are just missing to update. So there can be discrepancies. What are the other technical reasons? It could be timing issues. Now imagine your trade takes t plus 3 working days to get settled in US. So quite possible that the moment you enter into your buy, so you will record over here as 100 shares you have bought. But then, however, in the custodian's account, okay, in the custodian's account, it will take like t plus 3 working days. So only when there it is impacted, they are going to record. Okay, so there can be differences between these two set of records, and it will be automatically sorted out after t plus 3 working days. But then till that t plus 3 working days, this balance will not reflect in the system. Okay, it will not reflect in the system. So this is one reason: timing differences. Most of the discrepancies happen because of the timing differences. Okay, then next one is stock split. These are some corporate actions examples that has been noted here, like stock split. So what happens in a stock split? So in a stock split, a stock is split into multiple shares. So imagine you are getting 10 shares for one share. So if you are having one share, it will be converted to 10 shares in the actual balance. However, you are unaware about it. So in your record, it will still show as only one share. Here it will show as one share, whereas in the actual balance, it will show as 10 shares after the stock split. So after the stock split, it will show as 10 shares. So stock split is what? Stock split means company will split a share into multiple. It will split one share into multiple shares. Okay. So here in this case, it has been split into 10. So 10 shares will be recorded, whereas in the record it will show as only 1. The actual balance will show as 10. So again, there can be discrepancies. Bonus issues. So imagine again, company has added some shares freely, bonus issues. So again, it is not recorded in the ledger. So once we see this balance, we will investigate, and then we will come to know that it is bonus, and then we will record it over here as bonus. So there can be discrepancies. Dividend. So again, imagine dividend being paid out. So dividend being paid out again, investor might be unaware about it. That might not be recorded. So there can be discrepancies. Similarly, interest for bond. If he is holding bond, there can be differences because of updations of interest. Name change of the company. Imagine company's name getting changed, or else merger happening. So in such case also, the name of the company gets changed. So which may not be recorded by the investor in his ledger, but then in the actual record it will reflect, and so there can be discrepancies. Okay. So for because of all these reasons, these are just some of the reasons that I have mentioned over here, for because of which reconciliations need to be done. We need to make sure that the right balance is maintained. Now, why should we maintain these right balances? Because if we maintain the right balances, only then the company can take any further decisions about further investments, what should be done, how much amount to be invested. So in order to take such decisions, they need to make sure that right balances are always reflecting in their books, so that company can take decisions accordingly, right? And this reconciliation, I have added one annexure here in the PPT. This reconciliation, it is already done in our college life. There we learned this as cash book and passbook reconciliation. In cash book is the one maintained by the customer, and passbook is the one maintained by the bank. So bank will show the actual balance which is there actually. Okay. Whereas cash book is the balance that the investor or the depositor is maintaining. Okay. So there, these are the discrepancies why cash book and passbook discrepancies will happen. Again, these are something which we did in our college life. You can go through this. Okay. Thank you. Thank you for your time. Thanks a lot.